While everyone's screaming about Florida's housing crash, something bizarre just happened. Governor Ron DeSantis, in a closed-door meeting with industry leaders, accidentally revealed the real reason Florida's market is imploding. And it has nothing to do with what you've been hearing on the news. The mainstream story says it's simple. Prices got too high, buyers disappeared, and the market crashed. But that's not what's really happening. What's unfolding right now is a perfect storm that no one saw coming. The leaked details from that meeting expose a system collapsing from the inside out. So what's the real reason Florida's housing dream turned into a nightmare? And if you own property here or are thinking of buying, what happens next? Here's what they're not telling you. Florida's population boom, the engine that powered this entire run, didn't just slow down, it reversed.
And the numbers are brutal. Net domestic migration dropped to just 64,000 people in 2024, down more than 75% from the 314,000 peak in 2022. That's not a slowdown, that's a cliff dive. Between March 2020 and June 2022, home prices across Florida soared 51% compared to a 41% national average. Remote workers and retirees flooded in, driving demand to extremes. But when companies started calling people back to the office, the remote work revolution ended, and the influx stopped cold. Tampa's net migration plummeted 70%, from 34,000 in 2023 to just over 10,000. Orlando went from gaining 16,000 people to essentially flat. Miami lost 101,000 domestic residents, offset only by 553,000 international arrivals, a complete demographic flip that changed the entire market dynamic.
And the people leaving? They're heading to Georgia, the Carolinas, Tennessee, and Texas. States now receiving 48% of mortgage applications from Floridians escaping rising costs. Why? The first crisis, insurance. Picture this. You finally find your dream home in Tampa for $500,000. You can handle the mortgage. Then the insurance quote lands. $11,759 a year. That's nearly $1,000 every single month just for insurance, before utilities or property taxes. Florida has the most expensive homeowners insurance in America, and it's not close. The statewide average sits at $2,625 per year, about 24% higher than the national average of $2,110. But coastal homeowners routinely pay $10,000 to $12,000 annually, and that's if they can even get coverage. After Hurricanes Ian, Helen, and Milton caused over $13 billion in damages, dozens of carriers simply left the state. Progressive and farmers slashed exposure. Others refused to write policies on homes with older roofs. One insurer demanded a full $25,000 roof replacement before issuing coverage. No insurance means no mortgage. Deals collapse instantly. Even cash buyers are backing away, because one storm could wipe everything out. But here's where the leaked meeting gets interesting. While everyone thinks the insurance crisis is worsening, something unexpected is happening behind the scenes. More than 30 insurance carriers have quietly re-entered Florida since 2023. Citizens Insurance, the state's insurer of last resort, has dropped from 1.4 million policies to under 1 million. And for the first time in years, some areas are actually seeing rate decreases. Barrier Island premiums down 25%, inland rates flat or down 10%. The pros know this, retail buyers don't. And that information gap is creating opportunity. Now let's talk about the second crisis almost no one saw coming. HOA and condo costs. Tampa HOA fees jumped 17.2% in just 1 year, now averaging $614 a month. Orlando climbed 16.7%, Fort Lauderdale 16.2%. But the real disaster lies in older condos. After the Surfside collapse, Florida passed Senate Bill 4D, mandating strict structural inspections and fully funded reserves by the end of 2024. The result? Special assessments of $50,000, $80,000, even $100,000 per unit, often due immediately. At Orlando's Regency Gardens, owners were hit with $22,000 assessments, and monthly dues nearly tripled overnight. One Miami Beach owner saw fees jump from $400 to $1,200 a month, plus a $75,000 special repair bill. This affects nearly 1 million condo owners statewide. Add CDD fees, community district charges of $200 to $300 a month, and affordability simply collapses. The third issue, hidden structural defects from the pandemic-era construction boom. Homes built between 2020 and 2022 are already showing cracks, literally. Foundations splitting, water intrusion, mold, roofs improperly installed. Florida even shortened its defect lawsuit window from 10 to 7 years in 2023 because claims were flooding the courts. That means anyone buying those homes today has barely 5 years left to uncover major issues and sue. Buyers, meanwhile, have gone on strike, not because they can't qualify, but because they've lost faith. They're asking, why pay $500,000 for a home that might need a $30,000 roof, $12,000 insurance, $600 HOA, and still risk a hurricane? Governor DeSantis reportedly told industry leaders, "We're not facing a market correction. We're facing a trust collapse."
He admitted Florida's rapid growth wasn't managed properly. Infrastructure lagged, insurance reforms came too late, building standards weren't enforced strictly enough. The most shocking revelation? State economists now project Florida could lose another 100,000 to 150,000 domestic residents over the next 18 months, on top of the exodus already underway. That's a major hit to tax revenue, local budgets, and Florida's reputation as the ultimate migration magnet. One meeting attendee even quoted DeSantis saying, "If we don't fix insurance and HOAs within 12 months, we're staring at a decade-long recovery." And Florida's 2023 insurance reforms have already cut lawsuit volumes dramatically, down from 79% of national litigation to single-digit levels, even though Florida only represents 9% of total claims. That's a massive structural shift. According to DeSantis's internal forecast, the market could stabilize by late 2026 to early 2027, assuming no major hurricane and continued reform momentum. Bottom line, Florida isn't doomed. It's simply first to feel the pain and first to rebuild. Those who understand what's happening aren't panicking, they're preparing. History proves it. After 2008, the investors who bought when everyone else said Florida was finished made generational wealth. The same setup is unfolding now, not just here. So as Florida's housing market freezes, reforms take hold, and opportunity quietly rebuilds, one thing's certain. This isn't the end of the story. It's the beginning of the next one. And when the tide finally turns, you'll want to be ready. Stay tuned and stay subscribed for the next deep dive into what's really happening behind the headlines.